Uzbekistan placed dual tranche sovereign international bonds denominated both in dollars and local currency in the amount of 750 million US dollars on the London Stock Exchange on November 19. According to the country's finance ministry, despite the different face value currencies, all payments and settlements for both tranches are provided in USD, including coupons and repayments. According to Bloomberg, the bond sale is Uzbekistan's second foray onto international debt markets, part of a force to open up the country to global capital. It also comes as Joe Biden's U.S. presidential win and progress with the coronavirus vaccine spur appetite for riskier assets, driving emerging market yields to a record low. How correct is this assessment, and what is the goal from all those issues? To get the answers, we have contacted Deputy Minister of Finance Odilbek Isakov.
So this is basically to give you the market snapshot, right? So market snapshot is as such that equity markets change every time as news breaks out globally, which is of global importance. So you can start from Asian, as the day starts, Asian markets will open up. So you can see that Nikkei closed, it's already closed at minus 0.42%. Hang Seng is at 0.36%. Now European stocks are positive territory, Euro stocks 0.5, FTSE is up by close to 0.5. And now American stocks are going to open at 6 p.m. So you will see, but that's yesterday's close. Now, if you see year to date how much they've lost, FTSE lost 15%, right? Euro stocks lost 7%, 8%. Some of the American stocks have gained, especially Nasdaq, because of the electric nature. So what I'm trying to say is that when we issue, not Uzbekistan, but everyone who tries to come to capital markets, they look at the markets first, how the market is opening up, what are the key factors driving the market change, whether it's US elections or vaccines or US-China trade war, which we had last year, or anything that can drive the markets up or down. Oil price, when it tanks, obviously it impacts the markets as well. So it's true that after the US elections, the markets have gone better. You can see it from our bonds which we issued in February 2019. So you can see that towards the end of October, so when there was a lot of uncertainty in the market, so US elections, vaccine and other bits and pieces, our bonds, so let's pick that number, so that week. So that week was closed towards the end of October. It was closed at 110,455 on the price, and the yield was just 3.9%. Yeah, and then this is just before elections, 3.92, and then this is around 3.8 to 3.9%. And you can see that after the election, it's falling. So 3.8 to 3.7, and it stayed around 3.75. So which means that from that week or from this week to that week, we've already gained 0.15%. So what does it tell us? It tells us there's more demand for our paper. People are starting to buy these bonds because the markets are positive. And that's the right moment for us to issue. Of course, we will look at many different conditions, but American elections was definitely one of the key drivers. But the second, even more important, is the vaccine news. So Pfizer announced, then other drugs companies announced positive results, and the market was really happy with that. People were like seeing light at the end of the tunnel, and they were excited. They started buying bonds, stocks and bonds, and this is the right moment to sell. But if the market is falling like here, there, you cannot issue bonds, because even if the levels make sense, so 3.9, 3.75, it's only 15 basis points, so it's not too bad. But even if the levels make sense, people just simply don't buy. When prices are falling, people don't buy. When prices are rising, then they buy. So after our transaction, so this is when we priced this is the year-end level. So we ended at 3.75, right? So we announced on the 17th, then we ended at 3.75. So this is a closing level yesterday, 3.7. So it's already 5 basis points lower. And this is a current trading level, 3.56. So compared to 2 days ago, our yields have come down by 20 basis points, another 0.2%. Why? Because the issuance we have, so successful, we issued at 3.7%. It meant that if the 10-year paper, the real price is 3.7%, then this is effectively 8-year paper. Should be less. And investors started buying that. So it drove the yield down from 3.75 to 3.56. So it is market. It's not a rocket science, but you need to feel the market. You need to make sure you understand what investors want. You need to time it right. Timing is very important to have a successful transaction. If you don't time it right, then you won't have the success. We couldn't even issue SUMs if we, let's say, we're issuing here or there. SUM wasn't possible there. So you need to time it right. So one is strategic. Strategic, then we are sort of preparing the documentation, the presentation, investor meetings, the roadshow, economic fundamentals, and everything else. Good things about Uzbekistan. The second thing is tactical. And tactics is about looking at this, looking at that, expecting when the news might break. So US elections, everyone knew when this is going to happen. They didn't know what's going to happen, but they knew when. The coronavirus vaccine, nobody knew when this is going to happen, right? So that was a surprise. So that's why markets rallied. So to your question, it's not specific to one election or one vaccine. It's more about timing, watching the markets, expecting when things may be positive and when investors will be open to buy, and that's when we should pull the trigger. So banks have started issuing because banks were the only entities in Uzbekistan outside of sovereign sector who could issue. And why we're doing this? Because over the years, people complain about high debt accumulation. That's true, it happened, but it went to projects. And government had to take the burden and distribute this funding to companies and banks, right? Because none of them were ready. Still, companies are not ready. None of the state-owned enterprises, large or small, they're not ready to issue. They don't have IFRS, they don't have proper management, they don't have ratings, and there is still a lot of ground to cover. And I think next year probably one or two might be ready, like Nawai Mining and Metallurgical Combinate. But others probably will take 1 or 2 years. Now the president's presidential decree last month outlined that 32 companies, large companies, will be transformed. Ministry of Finance is responsible for this transformation, and these companies will eventually come in the medium term. Now the banks were ready. Banks were like more or less, they had IFRS, they had ratings. All they needed was to strengthen corporate governance, to strengthen their business model. And if you look at the banks who issued, SQB, SQB is working with IFC for a couple of years, and they've done a lot of work. They refocused the bank, they refocused the brand. It's more profitable. It's going into retail, high margin business, so they can issue. The second one who issued, NBU. NBU is 100% state-owned bank, 25% market share. And of course they will be able to issue. And the third one is Ipoteka Bank. Again, IFC story. They've been working with IFC since 2017, and obviously they're preparing themselves for privatization. So the bank was already operating like a good business model. So they could issue. Why they issued? Because they have a business, they need to lend money. Previously government gave them money or UFRD gave them money. Now we want to make sure that our banks and corporates are independently borrowing and investing in their own development. And the eurobond market is one of the ways to do it. It's not the only way. Obviously they can borrow, they can IPO, they can do many, many things, but this is a proven and tested route. It also helps companies and banks to be prepared for privatization, because they have to go through a lot of documentation, prospectus they need to prepare, which is similar to when they do IPO or privatization. Lots of legal documents, and the process itself is similar to privatization process. So that's sort of a good exercise for companies or banks who will eventually be privatized. And plus, I mean, if you speak to these banks, their capacity, the people's capacity, knowledge, experience, it's significantly gone up. It took them 6 months to prepare, but now they're much, much better than 6 months ago because they've already done it. We will soon disclose all these contracts in our government procurement portal. So probably by the end of November, we will put them up so people can see it. But I can tell you that banks got in total 0.1% of the proceeds. So if we issued close to 750 million, then the banks will get around $750,000. 0.1% is quite low. If you, let's say, take loan, even World Bank charges 0.3% or 0.5% if you take from JICA or others. So it's like 2-3 times lower than some of the multilateral loans. And legal counsel, I think it was about $185,000. So total, definitely without the third-party expenses, total is definitely less than $1 million, which is normal, or it's actually much lower than how this transaction should cost. And you should see that from start to finish, we ended up. Important thing about hiring good banks, international, globally reputable banks, and legal counsel, is that if you have this ability for you to get the best price is much higher. For instance, on the dollar trade, if you look at this bond, right? 555. Yeah. 555 million. It's 3.7%. The starting price was 4.25%. This is actually 30 basis points below its fair value. I mean, if this bond was priced at 4%, I still believe that based on the secondary markets, I still believe it was a fair price. But because of the good banks and good investor appetite, we managed to push it down to another 30 basis points. And do you know how much 30 basis points worth in dollars? 30 basis points multiplied by 555 million will give us around $1.5 million per annum. And this is a 10-year bond. 10-year bond. So because of this tightening, we managed to save $1.5 million for 10 years, so $15 million. So that's the difference between a good bank or good advisor or good transaction and not so good transaction. So you could, in a transaction like this, on the day, you could save tens of millions of dollars because of one decision. So that's why it's important that we hire the top-notch banks and lawyers.